India's equity markets reached new peaks in April to June as foreign institutional investors poured over 1 lakh crore into Indian equities. As the country's macroeconomic fundamentals remained strong and corporate performance improved, foreign institutional investors drove equity market inflows to new peaks in the first 3 months of fiscal 2024. A total of 1,02,000 crores, equivalent to $12.5 billion, was pumped into equities by foreign portfolio investors in the April-June quarter. Sensex and Nifty closed at record highs on June 30th, and on June 30th alone, there were inflows to the tune of $1.8 billion into Indian equities. There were 47,148 crores in foreign capital flows into equity market in June, the highest level since August 2022, when inflows reached to 51,024 crores. The FPIs expect that the Reserve Bank of India is at the end of its rate hike cycle. At this point of time, compared to other economies in the world, India's economy performs the best. There was also a turnaround in the corporate sector in the fourth quarter. As a result, we have seen FPI interest in India. A rise of around 10% in the Sensex was attributed to renewed interest from foreign portfolio investors in the first quarter. Additionally, higher fund flows resulted in stable rupee during the same quarter. During April to June, the rupee traded within a narrow range of 81.68 and 82.90 against the dollar. As compared to the preceding quarter, the fourth quarter of FY23's GDP growth was 6.1%, much higher than expected. An increase in Q4 growth pushed the FY23 growth estimate to 7.2%, and in FY24, the RBI expects real GDP growth of 6.5% with growth of 8% in Q1. As a result of pent-up demand in several areas, the corporate sector recorded a fairly steady performance in Q4 of FY23. As a result of the drop in commodity prices, input costs fell in the latter part of FY 2023. As inflation stayed within the RBI's comfort zone of 2 to 6%, the repo rate remained unchanged at 6.5% in June. A total of 76,407 crores has been purchased by FPIs so far in 2023. In January 2023 and February 2023, FPIs remained net sellers, whereas in March they turned out to be net buyers. The change between Jan, Feb and March and thereon can be attributed to one thing, that is the opening up of Chinese economy following COVID and expectations of a revival in growth and earnings of Chinese companies triggered massive flows to China in January and February 2023. As a part of their strategy, FPIs sold in India and bought in China in Jan and Feb 2023. At that time, China was viewed as cheap in terms of valuations and India was viewed as expensive. However, within a short span of time, the prospects in China deteriorated substantially while India's prospects improved. Now, FPIs have reversed their strategy and are buying in India and selling in China. Corporate earnings are expected to remain higher in India, leading to improved valuations, which will further encourage FPIs to continue investing in Indian equities. Though some say that the new disclosure norms of SEBI, that is the capital markets regulator, may dent foreign inflows to some extent, but rationally looked at, the SEBI disclosure norms are for more transparency, but it in no way deters the strong urge of FPIs in finding good returns from the Indian equities. Hope the information is useful to you all. Thank you very much.